The back and forth of the major markets continued last week as 4 of the 5 indices closed deep in the red. Like the prior week, emerging markets did the opposite of the rest of the major markets. There were little gains at the sector level as only materials and real estate closed higher last week. Earnings season is mostly wrapped up for this quarter, with only a few names left to report. While this season's earnings have been generally positive, concerns about forward-looking guidance have created weakness in a number of sectors. Commodities captured the headlines last week as the performance of crude oil and natural gas could not have been starker. Crude oil prices fell again last week, taking the S&P Crude Oil Index back into negative territory for the year, with a loss of 6.05%. As significant as this move was in oil, the jump in natural gas was even greater. Natural gas has had a number of sizable weekly gains over the last 52 weeks. However, the week ending November 9th saw a 13.15% gain for the S&P GSCI Natural Gas Index. This was the largest weekly gain since the week ending April 22, 2016. Natural gas inventories have been well below average this year, according to the EIA, leading to higher prices. As prices have risen steadily in the index, a number of contrarian investors were caught in what is known as a short squeeze. A short squeeze is a rapid increase in the price of a stock or commodity due to a lack of excess demand. The rampant price increase occurs when a significant number of short sellers, those borrowing shares, betting against an asset hoping that the price will decline to be repurchased lower, are forced to cover their positions, consequently buying shares of that same asset at a high, adding to the buy-side volume, only to send prices even higher. While shorting an asset that an investor holds can be a form of hedging an existing long position, shorts or inverse positions can be an incredibly risky move. When investors speculate and short or bet against a stock or commodity without owning enough shares to cover that position, the potential losses are essentially limitless as the prices can continue to climb higher and higher on the long side. This is the second major short squeeze that we've seen this year. The first occurred in the VIX market back in February, as one inverse VIX ETF fell apart after investors got caught on the wrong side of the trade. Unfortunately, as many of the indices are flat to negative on the year, a number of investors have tried speculative strategies to find gains this year. This very type of speculation caused natural gas to climb higher, as those shorting the commodity were forced to close their positions due to margin requirements. As a result, the index closed 15.08% higher after reaching an intra-week high over 31%. As we come into year-end, it's important that investors stay focused on their investment objectives and resist overly exotic methods to try to create gains in their portfolio that is beyond their risk tolerance. This week, the markets are likely to see less activity surrounding the Thanksgiving Day holiday, as the markets will be closed Thursday and also closing early at 1 o'clock p.m. Eastern Time on Black Friday. With the Camp Fire and Woolsey Fire still raging across California, it may be difficult for you or for some of your friends and family who may be affected by this destruction to find much to be thankful for this week. Our thoughts and prayers go out to the victims of the fires. If you would like to find out how you can help, please visit the American Red Cross website to see how you can contribute to the relief.